My name is Maurice Samogola. I work for Minet Insurance Brokers. We do insurance, risk management, and human capital consulting. The theme of this conference was maximizing value retention, and the aspect of national content was very ably discussed through the various subsectors of the project, from the Tilenga project to the Kingfisher project, as well as today we are now tackling the ECOP or the pipeline. Now, risk is at the center of any transaction. Oil and gas has one of the highest risks in any business, and these are very highly priced projects. And from these, there's a requirement to mitigate risks at all levels. The client will work with Minet to understand its risk management, to understand the risks, to mitigate these risks through processes, to go through the engineering with qualified engineers so that risks are mitigated. When these risks are mitigated, the project is delivered on time. The project is able to serve Uganda in as far as providing the requirements for the completed project. The loss is not suffered. The money is then retained through the retention that is done by those insurance companies. Of course, because of aspects of balance sheet, they have to share these risks with other insurance companies in the world, companies which have solid balance sheets. These companies are found in the Lloyd's of UK. These companies are found all over Europe. Mention companies like Munich Re, mention companies like Swiss Re, mention companies like Allianz, mention companies like AIG. The biggest challenge now that is now facing Uganda is that we are in the middle of an environmental crisis. Most organizations in Europe would not want to see a bigger footprint in terms of development of fossil fuel. They would rather we go to green energy. So there will be much more pressure on the project developers to ensure the risks are mitigated so that at the end of the day we can deliver the projects in time and we can utilize this resource. So there is a lot of emphasis in risk management. There will be a lot of reviews and make sure that people are operating within the very, very high standards demanded under oil and gas to ensure that these projects are delivered on time. In the short term, and because of the challenge of most companies in Europe not wanting to support this program either financially or through insurance protection, the Ugandan market has to look for other strategic partners, and these will be found in China. Some of them will be found in Asia, because China has a huge insurance market which can also ably cover these risks. There are also other reinsurers in Asia, Indian market, and part of South Africa. So these all put together should help the market complete the required capacity so the projects can move on. But in all this, the key underlying factor is a very astute risk management program. So clients have to work on a continuous basis with their brokers, with their risk engineers to ensure that the risks are mitigated. So if losses do not occur, then the premiums that are saved become part of the capital formation of these insurance companies and hence value addition to Uganda. So in the short term, the less losses are incurred, the better for the market, the better for the clients in that their premium can be then stable for purposes of ensuring that there will be continuous coverage of the risks in the Ugandan market.